Welcome everyone to another module for Market Fluidity University. In this module, we're going to discuss something very important, and this is related to impulse entries. I see a lot of people make the same mistakes over and over again, so we're going to get into it. Now, we're looking at this chart right over here, right? We're looking at this chart right here. So let me break down something here for you guys. So obviously, this candle that's closing a small bearish candle. Actually, let me just zoom in here a little bit. And then let's go over this here. Zoom in. Awesome, perfect, right? Like this. We have it all zoomed in. Beautiful. Let me bring up my marker. So impulse entries, it's not for, let's say if you're a new trader and you've seen someone do impulse entries on Instagram or you've seen me take trades like that, it's not for you at this point because you got to understand this, right? Impulse entries, it takes a lot of experience in watching things play out over and over and over again. It takes a lot of time. For me, it took months to be able to execute on impulse entry. So the simplest way to execute on an impulse entry is, let's say for example, we had a candle move up. We had another candle move up, but it closed bearish. Now we've created a resistance. Now, look at this candle and look at the wick right over here. This is a small wick at this point. If the next candle is breaking above this high, then it makes sense for an impulse entry to continue to push up, especially if we have clean range here to the left hand side, right? That's perfectly fine. No problem, because the main idea is if you're looking at an impulse entry, you want this wick to be as small as possible. If there's no wick here at the top, that's perfect. But if the wick is big, normally what I want to say is, now make a note of this. I'm going to pause for about 2-3 seconds, grab a piece of paper and pen and make a note. You ready? You don't have a pen ready. Get your fucking pen ready. Okay, so here's the thing. Whenever you're looking at an impulse entry, you're looking at the bearish candle, this wick over here, it should not be bigger than the body of the candle, right? For example, if we look at this candle right over here, right? If you look at this candle right over here, I know a lot of people who took buys as the candle broke above this high saying, oh, I'm taking an impulse entry. That's not an impulse entry. That's a dumb fucking mistake you're making right over here. It's not an impulse entry, trust me. Because look at this wick. This wick is way bigger than the body of the candle. Time and time again, you're going to see a scenario like this happen where you're going to see the candle break above this high with volume and this clean ratio left inside, and I know the things that go in our mind. The things that go in our mind is, okay, you know what? There's volume, price is trending up, we're breaking above the high, it's an impulse entry, let me take an impulse entry. No, don't do that, because number one thing, when you're looking at this candle right over here with a big wick, this wick is bigger than the body. Whenever you have a wick that's bigger than a body, that's called an exhaustion candle. This is exhausting right over here. This is not continuation. This is exhausting candle right over here. Even though if it's breaking above this high right here, it's still not a good idea to take an impulse entry. It does not work. There's another way to look at an impulse entry, which we're going to talk about later. But I just want to stress upon this situation where when you have a candle formation like this, this is the perfect example for an impulse entry. Right, Caesar? Yes. Caesar's right there, watching, listening. Right, so this is a perfect example where you see this wick, it's smaller than the body or equal to the size of the body. Next candle breaks above the high and we continue to push up. Perfect example for an impulse entry, right? Next one is, again, when you have a candle like this, whose wick is bigger than the body, and the next candle is breaking above this high over here, don't take an impulse entry like that. Number one reason why. Because if you're taking an impulse entry right over here, let's say you're taking a buy right over here, what's going to happen to your stop loss? Your stop loss is going to be way down over here. Very big stop loss, right? Because now, number one, you're missing out on these pips, right? And also your stop loss is too big right over here. But if you're looking at an impulse entry at this point, you're taking a buy, where's your stop loss? Your stop loss is below the current candle right here, and you're not missing out on any pips. whenever you're trying to take an entry, your entry criteria should be this, right? Is your entry at the best possible price or not, right? Is your buy entry at the break of a resistance? Is your buy entry near a support? That's it. Make a note. Whenever you're taking a buy, your buy should be next to a broken resistance, or it should be near a possible support. That's it. Only two criteria. For sells, it's the opposite, right? Now, when we're talking about resistance, whenever you have a candle that's closing bullish and then you have a bearish candle forming, this is a resistance formed. So whenever a candle is breaking above this high, as an impulse entry, it's also breaking a resistance. So your stop loss comes down over here. But if you have a situation over here where we're forming a resistance, and this candle is breaking above this high, man, like your stop loss is too big. What the fuck are you going to do? Your stop loss is way too big. If your stop loss is too big, you're using a smaller lot size. Your gain is also small. It just does not work properly like that, right? So whenever you're looking at impulse entries, there are two scenarios. So let me break this down right over here. Let's say you have a bullish candle that goes up, beautiful. And then you have a bearish candle that forms. And let's say this bearish candle has like a wick over here, and like a small wick here, no wick, whatever, right? Now, we're in an uptrend. When the next candle forms, the next candle, as it breaks above the high of this previous candle, that's the perfect way to take an impulse entry. The reason why is because if you're taking a buy over here, let's say B for buy, if you're taking a buy here, your stop loss could be below the previous candle. Or if you're feeling a little bit frisky, your stop loss can be below this current candle, provided that this candle does not break its own low and with volume continues to push up. That's the perfect way to take an impulse entry. And the opposite is true for sells. Now, if in this scenario, let's say you have a candle that closes bullish and the next candle is, bearish with a big wick. Obviously, this is a resistance form. And if you have a resistance form at this point, and if the next candle starts to move up right here, you cannot take a buy at this point. You can't take a buy at this point because it has not broken the high. This candle moves up right over here. Definitely don't take a buy over here. Why? Because you're missing out on these pips. Doesn't make any sense. It's way too far away from this resistance form, right? And if it closes bullish, then you can look to see that, okay, can I take a buy on the next candle? Can I take some sort of an entry? But taking an impulse entry as it's breaking above this high, just don't do that. Because look, good example is this. We broke above the high and then we retraced. What happened? You went in a fucking drawdown. Makes no sense at all. So now there's another way where impulse entries work in trending markets. Caesar, you know that?
Yeah.
No, you don't know that. But you're going to learn. But you're going to learn now. Now, there's another way, and another way is this. Let's say you have a bullish candle that forms like this, right? You got a bullish candle forming, and you know that whenever the bodies of the candles are getting bigger, this means there's a lot of volume moving in that direction, correct? There's a lot of volume moving in that direction. Next, you have another candle, that goes up, but the body starts to get smaller. And then you have another candle where the body starts to get smaller. Actually, you know what? Let's make this a little smaller, like this. The body starts to get smaller. Now, when the bodies are getting smaller, this means the volume moving up is decreasing. Correct? Correct. Volume moving up is decreasing. Normally, you're going to see a candle that's going to form bearish, like this, and someone's going to say, okay, we can move down. Good day, good trade, perfect. But sometimes the volume is so much, let's say we got a small body. The volume is so much that if the next candle breaks above this high, there's a very high probability the volume is going to continue moving. You've seen something like this before, Caesar?
Yes.
Right? The volume is going to continue moving up right over here. This is the perfect example to execute on an impulse entry right over here. I'm not going to say this is going to work 100%. This is going to work maybe 70%, 75% of the time, but we've seen this happen. For example, we look at right over here, right? Look, right here, we had a big body candle over here. We had a smaller body right over here, no trade. We had, this candle form, smallish body. We broke the high right over here, but you can manage risk. But when this candle broke above this high, these wicks, they became wick fills, and then we continue to move up. So what we're going to do is we're going to look at some examples, and we're going to go over those examples. All right, let's take a look at this example right over here. Now, we had resistance. Oh, actually, this happened yesterday. We had resistance. We had a candle that broke and closed above this resistance, right? Once we broke and closed above this resistance, what happened was that the next candle started forming. Now, when this candle broke the high over here, you think this is a good example for an impulse entry? Absolutely not. This is not a good example for an impulse entry. Why? Because your stop loss is all the way down over here. Even though you took an impulse entry, once this candle closed, it closed with a small body. Now, when the candle is closing with a small body, this means the volume going up is decreasing unless you get a confirmation from the candles themselves, right? If you don't get a confirmation from the candles, there's no buys, there's no sells, none of that. So let's see what happened over here now next, right? So once you got a candle that closed with a small body, the next candle broke the low right here. Once we broke the low, we know, okay, you know what, there's no buys, we can't do anything, nothing's going to happen, we're just going to stay away. But after we broke the low, we continued to move up, and once we started to break above the high, that's where a possible impulse entry goes in, because now look, the previous candle closed above resistance, right? The small body candle, it also closed above resistance. So when this candle starts to break above the high over here, now it gives us a little bit more confidence that price can now continue to push up. One thing I want to point right over here is that, let's say this small body candle, this wick was big. Now, I'm not going to say that the wick has to be twice the size of the body or 5 times the size of the body to make it look like a rejection candle, because if you're taking a buy right over here, obviously you're missing out on this pips. This is something you have to gauge with experience. There's no set distance it should be from the body. There's no set size it should have. It's just like you're basically gauging the size based on intuition. Let's take a look at another example. Okay, here we go. We have another example right over here, and this is the picture perfect example, right? And this also helps you if you think that prices moved a lot and now you can't take a buy because we've moved a lot, whatever, okay, let's take a look at this right over here. We had support right here, right? We have support. Obviously, price was trending down. We trended down, created support, and then we continued to move up. And as we continue to move up, actually, let me do something different here. Let me do something like this. Okay, right? So we were trending, we came down, we created support. Let's wait for the next candle. Next candle formed, bullish, awesome. Now what we're thinking that, okay, if the next candle is forming bullish, it has to move up, create some resistance, and then continue to push down, right? Awesome. Let's take a look at the next one. Next candle formed, we went further bullish. Okay, great. Because now we're creating a range for price to create resistance so we can continue to push down. So like a good trader, we're just waiting at this point. Now when you look at the next one, we have the candle that's closing with a small body. Now, when we're closing with a small body, this is giving us indication that, okay, volume moving up is decreasing. So maybe now if we can get a bearish candle forming, then we can continue to push down and have a nice day, good trade, awesome. But at the same time, we have to keep this one thing in mind. Now, if someone is trying to look for a buy over here, you're also thinking that if I take a buy here, we have moved from 23.88 all the way to 23.98, a 100 pip retracement. If we have had a 100 pip retracement, how far can price go? How far can price go more? But this is the trick. If the volume is decreasing right over here, this also means price is kind of like resetting at this point. if the volume is decreasing and if price breaks the high of the previous candle, there's a very high probability we can continue to push up, you know, because the volume is decreasing. We're getting some ideas that, okay, we may form a bearish candle, but let's take a look at the next one. The next candle breaks above the high and we continue to push up towards, what's this price? 2403. So from 2400 to 2403, 2405, actually we went towards 2407, 70 pips, right? So this is very, very important. Look, let me break this down here for you again. Let me bring up the marker. Now, till this price, we moved 100 pips, right? Till right over here, we moved 100 pips, and all we wanted to see was a bearish candle forming so that we can continue to push down. That's what we wanted to see, a resistance to form so we can push down. But we did not form resistance. The next candle, once it broke the high right over here, with volume decreasing, we broke the high. Now we know there's a higher probability for price to move up. This is something you can back test. You can look at the candles, you can see what's happening, you know, and it's going to help you more. Another example is right over here in front of us. As the candles were moving bearish, I guess you guys can see it now on multiple occasions. And this is where, you know, sometimes I take trades and like, you know, members of students, they say, oh, well, like, you know, it wasn't the right impulse entry, but we have moved, you know, 60, 70 pips. How are you so sure we're going to continue moving? This is how. Look, we had big body candle right over here. We had another big body candle right over here. And then the bodies start to get small. Bodies start to get small. We have another body that starts to get small. But when the next candle broke below this low, we continued to push down with volume. Another example is right over here as well. Right? We broke above the high and we continued to move up. We can go over all the examples over and over and over again, but the most basic way, the basic setup for an impulse entry when price is trending is this one right over here that we're looking at. This one. This is the most basic way to look at. If we're looking at it from a bearish perspective, this is what it's going to look like. You have a bearish candle form, boom, 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 bearish candle, and then you have a small bearish candle forming, indicating that the volume moving down is decreasing. Now, if the next candle, it breaks the previous candle's low, there's a high probability it's going to continue to push down, provided that this high is respected. That's the main thing. Make a note of this, that if you're trying to trade in the trend, as an impulse entry, the highs and the lows need to be respected, right? Right over here as well. Look, this low is respected by this low. And we broke the high to make a new high. Because whenever price is trending, we have to respect the highs and we have to respect the lows. We have to make higher highs and higher lows. That's the main thing. So go over this webinar again. I know going over this once is not going to help you. You have to go over this maybe 3 or 4 times, look at some examples in the charts, go over your trading history, go over where you fucked up on impulse entries, and 100% you're going to find an example where you should have waited a little bit longer. Hope this helps. Impulse entries are very important. This is impulse entries, I think it's the hardest technique to perfect, but when you perfect it, it's the easiest way to make money in the markets. Good luck and have a nice day.